Let's break down what's happening with Sound stocks. The growth has been remarkable, continuing for several days in a row. What's going on here? Volatility might give us some answers, as it has skyrocketed catastrophically up to 300%. This could indicate a sharp future increase. But most importantly, let's focus on the support and resistance levels and the trading volume of options. We see enormous resistance at the $7 and $9 levels. If we break through these levels, there is potential for a significant upward movement. Let's take this step by step from the beginning. Sound stocks started to rise. Let's immediately look at the news to see what acted as a catalyst for this growth. SoundHound AI stock rises further on expanded Stellantis partnership. SoundHound AI's voice artificial intelligence technology is being added to more Stellantis-owned vehicle brands in Europe. The company's SoundHound AI voice assistant with ChatGPT is live and in production in Peugeot, Opel, and Vauxhall vehicles in 11 markets. Stellantis DS Automobiles was the first international brand to install SoundHound AI's product. SoundHound product went into Stellantis DS Automobiles earlier this year. SoundHound noted that in March, Stellantis-owned French luxury car maker DS Automobiles became the first international automotive company to go into full production with the technology. This is naturally a good catalyst. By the way, I remind you that NVIDIA recently invested in this company as a promising stock related to artificial intelligence. Now, let's look at market forecasts and volatility. What is happening here? As we can see, volatility has skyrocketed catastrophically up to 350%, but this is for the near dates. If we look at longer expiration dates, this volatility is around 100%, and has only increased to 120 to 200%. This isn't much, but I assume this is just the beginning. Now let's look at the volatility smile. What is happening here? As we see, for most strike prices, the smile is directed both upwards and downwards. This is a very important point. We see that the cost of call options is proportionally equal to the cost of put options. In fact, this indicates that investors are actively buying call options, which is a very good sign for future growth. This means that investors and the market are betting that the potential for upward movement in the stock remains, and volatility is also increasing in the direction of rising stock prices, which is naturally good. Now let's look at historical and implied volatility. We see that historical and implied volatility are currently at about the same levels for closer expiration dates. This is actually a standard situation. I always say that you can trade not only underlying assets like stocks, but also volatility. At the moment, we can't get any significant benefit from this since volatility is proportionally in line with its historical values. Now let's look at support and resistance levels in options trading volume. We see very high volumes concentrated at the $6, $7, and $9 levels for call options. In fact, these are key levels. As we can see, we've already tested the $6 level, hitting it, and then falling back. This shows how crucial the $6 level is, having acted as an unbreakable barrier previously. But this time, as we see, we are breaking through the $6 level, though of course by the market close, the situation might change. But for now, this is the scenario. If we break through the $6 level, it is a very good sign. If we don't break it, then the resistance remains. And this might mark the end of this stock's growth. If we do break this level, it is a positive sign. What's the next level? It's $7. Again, if we break $6, the next target is $7. And I think we could reach it fairly quickly. The most important key level is $9. An interesting point is that there's nothing at $8. That is, $8 is essentially empty. The next level is $9, which is also a huge, huge wall and resistance. Moreover, options for this level are more active for September. This shouldn't be forgotten either. As we see, the $6 and $7 levels are for shorter-term options. That is, short-term options are in play, but if we look at $9, there are more long-term options. This could also become a significant obstacle. And as we see, beyond $9, there's absolutely nothing. If we can quickly break through these values, I fully allow that a very sharp upward movement might begin. Up to what level I find it hard to say, because there are no support or resistance levels beyond that. We will have to see how the situation unfolds. This data updates very frequently, so I will cover these changes as much as possible. Now let's look at the company's financial performance. Yes, the company is undoubtedly unprofitable, but as we see, the level of shorted shares at the moment is 25%. This is a lot, and I fully allow that a sharp upward movement might begin. This is where gamma squeeze and gamma spikes can help us. How does this work? Let me explain. At the moment when investors buy call options, the market maker is obliged to sell you these call options. When the market maker sells a call option, they have unlimited risk, meaning they can lose an unlimited amount of money. To hedge this unlimited risk, the market maker uses various strategies. One such strategy is delta neutral hedging. This means they buy as many shares as are equal to the delta of the options sold. This way, they can neutralize the risk, And the more the stock price rises, the greater the delta. The greater the delta, the more shares they will have to buy. The more shares the market maker has to buy, the higher the cost of options and the greater the delta. This creates a feedback loop where buying call options drives the stock price higher and higher, with short positions also supporting this movement. At some point, the stock could potentially skyrocket by hundreds of percent. In fact, it doesn't take much more for the stock to reach a 100% gain. It has already increased by 70%. By the way, I recently made a review about this stock on my channel. I have several reviews and you can watch them. In those videos, I also discuss such potential price movements in detail, which have now happened. Now, let's look at the most important aspect, the market forecast for this company. As we see, the market forecast for the end of the year predicts that the stock could peak at $60. What does this mean? It indicates that the market cannot account for such anomalous movements. The market incorporates all available information about reports, financials, and uses that to build its assumptions. Such incredible price movements are beyond the market's ability to predict. Therefore, the market suggests that the stock should fall. We'll see if that happens. If we look at the end of 2024, there is a high probability that the stock will be in the range of $5 to $60. The same principle applies. In reality, if there is a short squeeze plus a gamma squeeze, this may not last long. What am I saying? The stock could rise sharply and then fall just as sharply, which should not be forgotten. So one needs to approach buying the stock very, very carefully. What should you do? For example, I can't predict the price movement. I don't know where the stock will go. How can you play this? Let me show you an interesting strategy. If the stock starts to rise sharply, say to $12, we can easily make $4,000. Actually, if we increase the position to, for instance, 50 positions, the earnings would naturally be more interesting because the company isn't very expensive. So if the stock goes up to $12, we could earn $20,000. If the stock goes down to $4, we could earn $4,000. We start to incur losses if the stock goes below $2.50. Yes, undoubtedly. Every strategy carries risks. But think about it, the stock would have to fall by 60% to $2.50 before we start incurring losses. That's how I manage my positions. This is how my combination of options looks. However, I wouldn't recommend opening this strategy because it involves using several options at different strikes, and it requires active management. You need to buy options at the right moment and sell them at the right moment, which can be complex. I'm just showing you a hypothetical setup. I showed you this strategy only to illustrate how I trade. No matter where the stock goes, I continue to earn. Now let's quickly look at the volatility curve. As we can see, this is a very interesting graph. Volatility for some strikes and expiration dates is rising sharply, while for others it is falling. This also helps us in devising various strategies. To summarize the stock, I've already covered everything I wanted to say. If you're a long-term investor and believe in this company, it can be a good buy. Again, this all depends on your strategy. The company is currently unprofitable, but if it becomes profitable, it can bring substantial returns. Also, I remind you that I continue to manage a portfolio from scratch with a real account. I recorded a new video on trades. Today on Friday, all my trades are closing. I will receive profit from them and continue to grow my portfolio. Be sure to watch this video and leave your questions in the comments. Good luck to everyone.